Hello everyone, interesting video today all about HMRC procedure. So an interesting tax case which was heard right up at the top level, the Supreme Court, just being decided. So let me talk you through the background. So taxpayer entered into a form of tax planning and made full disclosure on his tax return. Now this is going back over a decade, about 2009, and said, look, I'm doing such and such type of tax planning, and basically there wasn't the entries on the tax return, there wasn't the boxes on the default tax return to explain what had happened on this tax planning. This tax planning basically was so complicated that there wasn't a standard box on the return. So what the guy did, he wrote chapter and verse in the white space. So the white space, as you know, is the blank bit of the tax return where you can write anything you want to explain numbers that are put in the standard boxes elsewhere in the return, just to give more clarity to HMRC should they choose to look at it. So basically, he put all this full chapter and verse disclosure in the white space, submitted the tax return. And because he did some big ticket tax planning, sure enough, HMRC opened an inquiry into his tax return. Now, the thing is, on a point of procedure, a technicality, they opened an inquiry via the wrong mechanism. Without going into the detail, there are various ways HMRC can commence an inquiry into an individual's tax return, and they chose the wrong one. Now, HMRC, when they open inquiries, they also have this other type of attack in their armory, as it were. It's called a discovery assessment, which says, okay, let's assume they did open up a wrong inquiry. However, they also have in their locker this discovery assessment, which says within 4 years, if we discover a loss of tax, we can inquire into the return, broadly speaking. And that 4-year limit after it was filed is extended to 6 years if HMRC believed there was careless error. And that 6 years is extended to 20 years if HMRC say there was a deliberate error. So HMRC challenged this guy, took him to court and said, look, even though we opened the inquiry initially using the wrong mechanism, we're going to come after you via this other route in the tax admin law called the discovery assessment. And again, we're beyond the 6 years, and we're going to say that it was a deliberate error. What happened was you put the correct figures but in the wrong boxes. It's almost comical. It reminds me of the Morecambe and Wise sketch. I'm playing all the right notes, not necessarily in the right order. That's exactly what they said. They said this guy had got the correct figures but in the wrong boxes, and that constituted deliberate error. So this went all the way through the courts, and the Supreme Court 10 years later said, no, putting the correct figures in the wrong boxes of the tax return is not deliberate error. This guy made a full disclosure in the white space. There wasn't in his opinion, it wasn't a box applicable to what he was trying to show. Hence, he divulged everything, full disclosure in the white space to make it clear to HMRC. And the Supreme Court ruled against HMRC and said, look, that is not a deliberate error, putting all the correct figures in the wrong boxes. So just a bit of common sense, really. Thankfully, that the Supreme Court did agree with that. Now, on the other side of the argument, I guess the fact that this guy did do some big ticket tax planning, that had HMRC opened the inquiry in the first place and or got the discovery assessment in within 4 years, he could have been defeated and ended up paying a lot more tax. But that's beside the point. This whole thing turned on the point of procedure and the fact that HMRC were just too late. So the guy got away with paying the lesser amount of tax due to this planning that might have worked or might not have worked. But the point is, HMRC lost this court case on a point of procedure because they said, oh, we can invoke our 20-year rule because of this deliberate error, when the court said it wasn't a deliberate error. This guy gave chapter and verse. You just did not get in on time to challenge it properly. So there you go. Just an interesting court decision by the Supreme Court, the very highest court in the land, on what we call discovery assessments. Like I said, part of HMRC's armory to say, look, we can challenge something years after the event. 20 years for fraud and deliberate errors, but putting something in the wrong place on the return but making full disclosure elsewhere is not deliberate error. Thankfully, that was clarified by the court. So, if you like this video, please do subscribe right there, and as always, I will see you soon.